Hey guys, welcome back to the Algo Chicken channel. Today, we're going to be testing one of the oldest chart patterns, and that is the three white soldiers. The three white soldiers is a bullish reversal pattern, which is made up of 3 consecutive up days, and the open of each candle is higher than the open of the previous candle. Now, I'm going to be using this pattern in a mean reversion strategy, as this pattern indicates a weakening downtrend. These are the rules for the system I'll be testing. Firstly, the three white soldiers pattern has to be formed. Next, all 3 candles have to close below the 200 period moving average, which is our trend filter. We will then exit the trade when the current day's candle closes above the 200-day moving average. Now, let's review its performance. So now I have the SPY loaded on the daily time frame as well as the 200-day moving average, as seen here. As you can see, here are the 3 white soldiers. Here's where the pattern occurred. And then because it's below the 200-day moving average, there's a buy signal generated. Then it stays in the position until the candle closes above the 200-day moving average. Now let's have a look at the strategy performance report. So as you can see, it is not a good strategy. It is losing money. It has lost money throughout the whole trading period. So clearly it doesn't work in the long run. The strategy overall gives us a net loss of $7,665, and the max drawdown is a whopping 63%, which is extremely high. I'm pretty sure no one will want to hold or continue trading this strategy with such a big drawdown. This is despite having a very high percentage profitable of 78.26. But this could be just due to the small number of trades. As you can see, overall, there's only been 23 trades throughout the whole trading period of let's see, what's the trading period? 29 years. That's very little trades. Let's have a look at the trade analysis. As you can see, the average trade is negative right here, which is a bad thing. Its percentage profitable is still quite high, so maybe it's something that you guys can take into consideration if you choose to do further research into the strategy, like for example tweaking the exit, because maybe the exit I used, which in this case is the close above 200, the 200 period moving average, that may not be the best exit to use with this kind of entry. So here's the annual period analysis. Not a lot of trades over the years, but that can be increased by lowering the time frame, which y'all can do. And now let's test it on the other markets. Let's see if the strategy works on the other markets. Here is the strategy's performance on gold. Looks like it is profitable, with us earning a profit of 77,000, though the drawdowns are still quite high at 27%. This strategy has a pretty high win rate of almost 90%, which is very high. But again, this could be due to the very low number of trades, which is 19 throughout a period of, let's see, 17 years. Yeah, that's still very little trades. Let's take a look at the equity curve. Yeah, so as you can see, it's made a profit. If you started trading at about 2013, I think you would be on a pretty good run as of now. Even during these times in 2022, it seems to be doing not too bad. And in 2020, it wasn't really affected by the COVID crash, so I guess that's a good thing. But if you include the whole trading period, I would be a bit more careful. Here's the strategy equity curve on TLT, which is absolutely terrible. As you can see, it remained flat for this whole period until it started becoming profitable up till about 2019, 2018. At the end of 2020, it just dropped downwards. One last modification I would test this strategy on would be the look back period for the trend filter. Maybe instead of using a 200 period moving average, you could use maybe a 50 period moving average, or basically a shorter look back period. So in order to test the different look back periods, I have done an optimization over here. As you can see, I've optimized the values This is the optimization report from a period of 20 all the way to a period of 250. It seems to me that the values 150 is the best. Right here. Yeah. Now let's look at the optimization graphs. Here I have the net profit for all the different look back periods displayed here. It looks like the strategy makes more money as the look back period increases. As so. This is only using a test period of from 2016 all the way to 2021. Okay, so now let's apply the strategy to the full history of the SPY and see the results. Nope. Absolutely terrible. Well, again, there isn't much difference in terms of the trading performance. So let's see if the strategy does better in other markets. So the strategy looks profitable on gold, which is the same as before the optimization. Still the drawdown is quite high, of about 20-25%. Here I have the strategy displayed on the bond market, again not profitable at all. Very bad results. As you can see, the strategy does seem to be profitable on some markets, but over the long term, the strategy doesn't seem to hold up. Despite the strategy making a net profit on gold, further testing still should be done before trading this live. I personally wouldn't trade this strategy, but feel free to do your own research, such as using different exits and even adding other indicators to this strategy. If you have any strategies you would like me to test, drop it in the comment section below and I may feature it in future videos. Thanks for watching, and remember, think like a robot and trade like a chicken.